Thursday, April 20th, 2023, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at what happened when I challenged Lord King to a debate on sound money and fiat currency. Yes, Lord King, the former governor of the Bank of England, Mervyn King. And you might say, why would he accept an interview or debate with you? Well, I've had a Lord before, Lord Lilly, and we spoke about the energy crisis and the Climate Change Act of 2008. We spoke last August about it. So if you haven't heard that one, I recommend you do. I'm going to put it up in the cards. Before we go into the Mervyn King invitation for a debate, I just want to say that I'm posting a lot of my videos as shorts on TikTok. Why not on YouTube? Well, because I find that it gets very little traction on YouTube, putting the shorts on YouTube. But on TikTok, yes, I don't get a lot of views all the time, but I have a video, a little short video that I did on TikTok that's got almost 250,000 views. So if you want to follow me on TikTok, it's at Monaco64. Back to Mervyn King. And I actually have a book by Mervyn King, which he wrote a few years ago, and I recommend it. He at least recognizes there's a problem with the financial system. It's called The End of Alchemy, Money, Banking, and the Future of the Global Economy. So here you go, book by Mervyn King. I particularly found interesting the part where he says that maybe the answer is to go to 100% deposit banking. And he refers to the Chicago School back in 1933. They recommended that. And also have a distinction between deposit banks and investment banks, where in the investment banks you would issue equity to try to grow companies and startups. And so, yeah, I recommend the book. There you go, Lord King. I'm doing you a favor here. But anyway, back to my invitation. And this is not the first time, it's the second time. And I think the first time was around early last year. And the reason I invited him to the channel was that I agreed with him with what he was saying back in November of 2021. And we're going to go over this article here. Yes, it's in The Guardian, but it doesn't matter. It's from November 23rd, 2021. And this is what Lord King, or Mervyn King, said. Central banks have King Canute theory of inflation, says former governor. Mervyn King questions theory that inflation will remain low because we say it will. Central bankers have been caught unawares by rising prices that have exposed their King Canute theory of inflation, the former governor of the Bank of England, Mervyn King, has said. In a strong attack on how policymakers around the world have reacted to the COVID-19 crisis, Lord King accused them of relying too heavily on models that showed inflation always coming back to its target, whatever the level of interest rates. And they're still doing this, and I'm going to show you that in a minute. And it's not just central bankers, it's all the City of London, Wall Street economists. This is the King Canute theory of inflation. 1,000 years ago, King Canute of England set his throne by the seashore and commanded the incoming tide to halt. The tide continued to rise and dashed over his feet and legs, driven by the laws of nature, the former governor said in a lecture to the Institute of International Monetary Research. A satisfactory theory of inflation cannot take the form inflation will remain low because we say it will. It has to explain how changes in money, whether directly via quantitative easing or indirectly via changes in interest rates, affect the economy? Well, this is the interesting part here, and this is November 2021. Don't forget, this month, the Bank of England left interest rates at a record low of 0.1%, while forecasting that the annual rate of inflation would continue to rise, peaking 5% next spring. So a year ago, so back in November 2021, they said it would peak at 5% in the spring of last year. And here we are above 10%, right? So I said I would show you how they're still at it. Well, look at this article from the FT from yesterday. Stubborn UK inflation rate is forecast to lose energy in months ahead. Underlying data indicate Britain not the global outlier on price rises it might appear to be. So they've got this model again here, and this is from Capital Economics, Citigroup, and the Office of National Statistics. So there we go. It was supposed to have peaked at 5%. Of course, it's gone above 10, and now they're saying it's going to go down. It looks very convenient, doesn't it? But anyway, I just wanted to show you that. Let's continue the article, though, because it's quite interesting. King, who was in charge of the bank from 2003 to 2013, said he was not criticizing individual decisions made in recent years, but was concerned about the intellectual foundation of central bank policy. Well, yeah, they're all in their own bubble, these guys, these economists. Looks like Lord King or Mervyn King not being part of the club anymore, being outside. He actually has a better view of things. When King Canute sat in front of the incoming tide, his purpose was to show his courtiers that he was not omnipotent and could not by words alone undo the forces of nature. Central banks would do well to show the same humility. Under King's stewardship during the global financial crisis of late 2000s, the bank slashed interest rates and pumped money into the economy through QE and a bond buying program. The former governor cited a House of Lords report suggesting QE had since become the first resort of central banks to bad news of almost any kind. The failure to withdraw QE in response to good news, or even the absence of bad news, had led to a ratcheting up of central bank balance sheets, something King said was unsustainable. He's right. And less than a year later, they used QE again to save the defined benefit pension system in the UK last fall. Also to save the gilt market. So I'm going to stop right here. I'm going to put this article below in the description. Just wanted to give you a background on why I asked Lord King for the first interview, and it was around the same time, late 2021, maybe beginning of 2022, and I found his email, and I send an email requesting an interview, and his secretary said at the time that he regrets to inform that his schedule is too busy. So this is what I did yesterday, because we know that UK inflation is out of control. As I said in my video yesterday, they thought it was going to peak last year in the spring at 5%, and here we are a year later, and we're still at 10%, and we still have the base rate nowhere near the rate of inflation or CPI. We're at 4.25. Even if we take it to 5%, it's not going to solve the problem. And these people are deluded. I think they think that 5 will be enough now. So yesterday I decided to try again. And as I said, I have interviewed a former politician, now a Lord Lilly, and I thought, why not try a second time? And this is what I said. Dear Madam, Sir, I have followed Lord King's views on inflation for over a year now and agree with him about the King-Canute theory of inflation that Governor Andrew Bailey is conducting at the Bank of England. Maybe he didn't like that because he thinks you're not supposed to blame any particular person. But I'm sorry, Lord King, the buck stops with the governor. I have been running a YouTube channel from the UK since early 2016, warning my viewers about the fact that our current monetary system and the currencies in it will eventually return to their intrinsic value of zero, as Voltaire once said. That was paraphrasing Voltaire, who said that the intrinsic value of paper money is zero. I would like to give Lord King the chance to debate my view that money should be sound, gold and silver, like prior to 1914 and 1920. Why 1920? Well, that's when they took half of the silver out of sterling coinage. And why the British public should have a currency that is not inflated constantly by the government with the support of the Bank of England. I look forward to hearing back from you. Kind regards, Mario and Echo. And I said my YouTube channel has just over 89,000 subscribers and almost 25 million views since its inception. And I did get a reply a few hours later. Dear Mario Neko, Lord King has asked me to reply to your email. He declines your interview request with apologies. The diary is completely full. So I'll keep trying. Maybe in a year's time, when hyperinflation has kicked off in the UK, he might want to come on. I was going to use Bank of England data to debate him, ironically, because ever since, well, during the period that England was under a gold standard, which started in 1717 up until 1914, you can see that inflation averaged 0.3% a year. And it would have been a lot less if we hadn't had what was called the Bank Restriction Act of 1797. Well, for almost a quarter of a century there, they suspended the gold standard because of the Napoleonic Wars. And I would argue that 0.3 would have been a little lower. As you can see here, from 1821, when they went back on the gold standard after that Restriction Act. And the Restriction Act was just like what Nixon did to suspend the convertibility of the dollar into gold temporarily. Well, the Bank of England at the time did it temporarily because they went back in 1821. And then from then until 1914, we actually had negative inflation, minus 0.1% a year. And this country didn't do badly in the 19th century, as most of you know, up until World War I. So this is showing you here that in 1914, you only needed £9.51 to buy what you could buy with £10 in 1821. And then I was gonna show him this. And this, I think, until recently was a lot worse, the rate of inflation here from 1914 until the end of 2022. Right now it says it was 4.2, and that's under our current fiat currency system. But I remember looking at this years ago, and it used to be in the fives. I think they've tinkered with the number, not the Bank of England, but the Office of National Statistics, but the Bank of England used their data. But even if they've doctored that, it's a lot worse, isn't it? During the gold standard, there virtually no inflation, 0.3. Since 1821 to 1914 was negative, and now it's 4.2. So there you go, Lord King. Hopefully one day you will decide to come on the channel and yeah, have a debate. You might convince me that it's better to have fiat currency. I'm open to your views, even though I still think sound money is better. There you go. So with that, let's quickly look at where the markets are this morning. It's 20 past 8 a.m. London time. We've got, well, let's check the monies, the real monies first, or spot gold and silver. Spot gold is trading at 1997.40 in terms of fiat dollars. It's up $3. High's been 2001, the low 1987. Silver is down 10 cents. Silver did really well yesterday in that it came from a big hammering and ended the day up. So, and above 25. But right now, yeah, we're down 10 cents at 25.19. High's been 39, low's been 25.04. To the stock market, the Dow futures is down 65. NASDAQ 100 futures down 76 points, and the S&P is down 17. So stock market losing a little bit of ground here this morning. To the fiat currencies, cable or sterling versus dollar is down slightly at 124.34. The euro is virtually unchanged, 109.50. The dollar is down slightly versus the yen, 134.52. And the yuan, dollar yuan is unchanged. So currency market fairly calm right now. The ruble is virtually, well, dollar is virtually unchanged at 81.50. Let's look at the Aussie dollar. Aussie dollar is up slightly, 67.18. The dollar is unchanged versus the loonie or Canadian. And the Kiwi dollar is actually down 0.5% at 61.70. To the general commodities, we've got WTI crude down 1.5%. So it's back below 80. It's at 78.02. Brent is down 1.5% at 81. Let's check the general commodities. We've got WTI crude down 1.5% at 78. Brent crude is down 1.5 as well at 81.60. We've got platinum trading down $10 at 1,082, and high-grade copper is down 0.2% at 405. We're gonna finish off looking at the bond markets. We start with the U.S. Treasury curve. The 2-year yield is at 4.21. That's down 5 basis points. And the 10-year is down 5 basis points as well at 3.56. The 3-month, which is related to the debt ceiling, of course, and whether the U.S. might default, that's actually up 14 basis points, almost at 5.30. So markets are concerned there about the debt ceiling impasse. And to the UK yield curve, which we saw spike, yield spiked quite significantly yesterday. Right now, the 2-year yield is down slightly at 3.81. It's down about 1 basis point. The 10-year is unchanged at 3.85. And the 30-year is unchanged at 4.19. So with that, I'm going to wish you all a very good day. Take care. Bye.